I want to share something with you today that I've been thinking about a lot recently because it's one of those things that once you see it, just changes how every single appointment feels. And this idea comes from a guy named Tom Hopkins who wrote a book called How to Master the Art of Selling Financial Services. And he's a legend in the industry. If you haven't read his book, I recommend that you read it. And in one of the chapters, I remember he talks about this thing called the Porcupine Technique. And I know it's a weird name, right? But the idea behind it is one of the best things I've ever come across. And I want to walk you through it. So Hopkins says, imagine somebody threw a porcupine into your lap. What would you do? You would throw it back immediately because it's sharp and it also hurts, obviously. And that's the whole visual that he gives in that part of the book. And when a prospect throws a question at you, your instinct most of the times is to catch it and answer it. And Hopkins says, no, you throw it right back. You answer a question with a question. Now, let me explain why this matters because it sounds like a trick, but it's actually the most respectful thing you can do in an appointment. Most life insurance agents are trained like this. Prospect asks you a question, you answer it. For example, a prospect goes, how much is $1 million of coverage? And we go, well, for someone your age and health rating, it looks like about $85 a month. And we say it fast because we want to seem knowledgeable. We want to seem prepared. We want to seem professional. And what happens is the prospect goes, oh, $85 a month. Okay, let me think about it. And the appointment starts kind of like spiraling downward. And the problem with answering those questions directly is you have no idea what the prospect actually wanted when they asked it. So were they asking because they think that price is too high? Were they asking because they think it's like suspiciously low? Were they asking because they were told by their cousin that $1 million of coverage should cost $1,000 a month? Were they asking because they were secretly hoping to afford $2 million in their testing? You have no idea. You just gave them a number in a vacuum, and now they have to process it in a vacuum. And their brain is going to do what brains do, which is default to caution and say, let me think about it. And you don't want to get a let me think about it. And so the porcupine says, don't answer, ask back. Don't leave the porcupine on your lap. Throw it back as soon as possible. So when the prospect says, how much is $1 million of coverage? Instead of answering, you go, hey, that's a great question. Are you thinking $1 million is around like what you want, or are you thinking more or less than that? Do you see how that's completely different than going on and answering? It would be $85 a month for someone your age and your health rating. So that question is doing so much work. First, we're talking about the second question. First, it's finding out if they're already telling themselves they want $1 million, which means they've already anchored on that number and now you know kind of like the range. Second, it's opening the door for them to kind of like even go higher, which they might, because a lot of people, they underestimate what they actually need. Third, it kind of like slows down the conversation and puts them in the driver's seat, which builds trust. Now, their answer is going to tell you kind of like the whole story. If they say, well, I was thinking $1 million because that's what my brother has. Now, you know they've done research and they're comparing themselves to a family member. So if they say, for example, I don't know, that was just a number I threw out. What do you think I should have? Now they're asking for your recommendation, which is a completely different conversation because for a lot of families, to be honest, $1 million is not enough. You really have to do the math of the human life value, figure out what the number is. And so if they ask for your recommendation, that gives you an opportunity to really help them out in a way that they must be helped, and also that gives you the ability to close maybe a higher premium case. If they say $1 million feels like a lot, honestly, maybe I was thinking about 500,000. Now you have a conversation about coverage adequacy before you have a conversation about price. Are you guys seeing how this works? One question they ask, one question you ask back, and you've completely changed the direction of the conversation and the direction of the appointment. Let me give you another one. Let's say the prospect goes, does this policy build cash value? An old school agent says, yes, it does. This IUL builds cash value based on an S&P 500 index with a floor of 0% and a cap of about 10%. And then the prospect's eyes, you can just see them like glaze over, right? So now the porcupine version, which is the one you should do, you shouldn't keep the porcupine on your lap, you throw it back. Prospect says, does this policy build cash value? And then you say, yeah, it does. Is cash value something that's important to you, or are you mostly focused on the death benefit for your family? And now the prospect tells you exactly what their priority is, as opposed to them not caring about cash value and then you saying, oh yeah, so yeah, it has this cash value and this feature and the cap and the floor and all of these things that they don't even care about. Maybe they could say, hey, honestly, I just want to make sure my kids are taken care of. Cash value doesn't really matter to me. Great. Now you know to lean into the death benefit conversation and not spend 20 minutes explaining index caps and floors and interest rates. Or maybe they say, yeah, my brother-in-law told me about an IUL that he has and I wanted to use it kind of like a cash value component of my financial portfolio. That's a different conversation entirely. Now you know to walk them through the accumulation side of the illustration. Let's do one more example. Let's say the prospect goes, can I cancel this policy anytime? Old school agent that doesn't really know what they're doing, yeah, life insurance is not a binding contract on the consumer. You can cancel at any point. And then the prospect nods their head and you move on and you learned nothing. So once again, do the porcupine version. Yeah, absolutely, you can. What's making you ask that? Is there something about the commitment that's giving you like making you not want to make a decision, or are you just wanting to know your flexibility? And now they tell you. They could tell you, well, I lost my job 2 years ago and I'm nervous about like locking myself into another monthly payment. Now you know the real concern. The real concern was never cancellation. The real concern was affordability in the case that they're unemployed. And now you can address it as opposed to just addressing it head on without figuring out what the issue is. And so the thing this technique does more than anything else is it forces you to slow down and it forces the prospect to talk more. And in every sales appointment ever, the person who talks more is winning. Okay, and let me rephrase the winning. If you want your customer, your client, your prospect in front of you to win, you want them to buy. And so winning is your prospect buying. So let them win, let them talk more. If the agent is doing 70% of the talking, if you're talking and just talking about products and benefits and all these different things for 70% of the meeting, the agent, you are losing. If the prospect is doing 70% of the talking, on the other hand, you, the agent, you're gonna win the sale. And so the porcupine flips the ratio in your favor without you having to do anything except stop answering questions right away. Now, I want to be really clear on when not to do this because you can overdo anything. If somebody asks a factual question that has a clean answer and no emotional content behind it, just answer them. Like if someone asks me, what's your name? I'm going to tell them Giovanni. Like I can't porcupine that. And if someone asks you your name, don't porcupine that, please. If someone asks, when would we start the coverage? The 1st of next month if we get everything filled out today. Fine, like that's straightforward. The porcupine is more for questions that reveal how the prospect is thinking about price a little bit more before you say anything, before you answer. And so the other thing I'll say is about price or questions about coverage amount, questions about product features, questions about their commitment level. Those are the ones where the question itself is kind of like a window into their brain. And you want to like open that window. The other thing I'll say is this doesn't feel natural at first. The first 10 times you try to porcupine, you're going to forget and you're going to blurt out the answer. That's fine. Like that's going to happen. Everything in life is about practice and building that muscle. You build it over time, right? You don't just go to the gym one day and then the next day you're like ripped. That's not the way it works. I wish that was the way it worked. So what I recommend, and I did this for months when I first started paying attention to it, is you write down the 3 or 4 most common questions that your prospects ask on every appointment. Write them on a sticky note next to your monitor, and for each one, script the porcupine response. That way, when the question comes in the next appointment, you've already got the pivot ready to go. So a really simple homework, and this is homework nobody's ever gonna assign you, is grab your last 3 appointment recordings if you record them, if you have them on Zoom, right? Obviously record your meetings with the prospect's consent. If you record them, you just count, right? Count how many questions the prospect asked and count how many of them you answered directly instead of asking back. And I bet the ratio is going to surprise you. Most of us are like 90% answering, 10% porcupining. Porcupining, that's a funny verb. And it should be more like 40% answering, 60% porcupining. And so, I mean, at least in the discovery and objection phases of the call. And when you make that flip, appointments will start feeling different because the prospect feels heard because you're asking about them instead of pushing at them. And you feel more in control because you're guiding the conversation instead of chasing it. And the sale, if the sale is meant to happen, tends to happen faster and easier because by the time you get to closing, you already know everything you need to know about what they want and what they're afraid of. And so the bottom line is this. We don't sell life insurance by giving people a bunch of information that overwhelms them. We sell life insurance by understanding people. And every question a prospect asks is a doorway into what they actually want and what they're actually worried about. And if you throw the porcupine back instead of catching it, you get to walk through that doorway with them instead of standing outside guessing. And so one more thing before I wrap up today's video, this is not about being evasive or dodging like real questions. Very important because it's a very big difference between like porcupining and just evading questions. You don't want to evade questions. Like if a prospect deserves a real answer to something, give them a real answer. The porcupine is more for moments where the question itself is more revealing than any answer you could give. And those moments are more common than you think. So start listening for them. So with that being said, I hope that was valuable. I'm here. I'm rooting for you. You got this. Take care. Let's get to work.